Hello guys, this was a live trade example. As you can see, this trade is running in a profit of $18.79. So how exactly was I able to make this trade analysis? It's exactly what I want to share with you. As I always said, remember, you don't get paid trading just for the strategy, but you always get paid for the numbers of trade that actually plays out in your direction. So how did I make this trade entry? Remember, this price has been in a downtrend. So, and you can see that obviously that we are having what? Having this lower high. We're having this lower low. Here we have a lower high. And here is our new lower low. So having established this, how did I make my trade entry? First, I determine my trend. Second, I now know that my range is from this zone all the way to this point. So this movement is my range. So this is my down range, and here is my upper range. Then I look for liquidity. Where is the liquidity in this price movement? So I saw that there's an internal dynamic liquidity at this zone. You can see that is the liquidity I'm referring to. So this liquidity here was taken by this price that pulled to this upside. So immediately identify that I need to get my institutional candle. So what I did was to mark the candlestick that took away liquidity. So if you look at this particular bullish candle that went up here, let me zoom out a bit so you can see what I am referring to. This particular bullish candle was what took away this liquidity. So that candle forms part of our what? It forms part of our institutional candle. So this is the candle that took away liquidity. This is our order block. So immediately I identified that scenario, I got relaxed and I was waiting for price to pull back into that zone. So if you look at this, price eventually pulled back into that zone, almost 50%. So the mitigations happen at 50% of that zone. So when I saw this mitigation, which is price returning into that zone, the next thing I need is my entry confirmation. So if you look carefully, you realize that this is a bearish engulfing candle. So I actually did not see this early enough, right? Now because I didn't see this early enough, I missed this particular entry. So when I now saw it, I had to make the entry at this zone. So that is how I was able to come into this entry. And you can see how price has been playing out in that direction. So it is simple. And remember, in a downtrend, price is not permitted to take the liquidity of the lower high, but price is to take, in a downtrend, price is not allowed to take liquidity of the lower high, while liquidity of the lower low is only what is meant to be taken by price. So that is why our stop loss will be at the structural point of a lower high in a downtrend. Our take profit, it will be at the structural point in a lower low of the downtrend, because we are expecting price to take away the liquidity here, so we can create a new lower low. So that is why I had my stop loss there. Now I have a new trade high there. Remember, we are still in a downtrend, okay? So if price eventually give us a new lower low by closing beyond this level, it means we'll have our new lower low somewhere here, right? And then here is our new lower high, okay? So if you look carefully, there is already a liquidity sitting here. And if you observe well, this candle has taken away that liquidity. So let's look at it in this perspective, and you will observe what I am saying. So we have liquidity that is sitting here. So beautifully well, that is the liquidity that is sitting on this zone. You can see that carefully. So you can see this pin bar. That was a liquidity sweep. That pin of that candle is a liquidity sweep. So as you can see, price has done what? Price has taken away this liquidity from that zone. So since this is going to be our lower high and we're expecting a new lower low, right? See, this is going to be a new lower high and we're expecting a new lower low. So it means that our institutional candle now is this candle that take away liquidity. So this candle that take away liquidity automatically becomes our institutional candle. So we are waiting for this to play out perfectly well, and that is what we are looking forward to. So how will that be? In this scenario, we'll be patient enough for we will now mark that institutional candle as our point of interest, because that is the candle that take away liquidity. So what are we expecting? We are expecting price to pull back in the subsequent time into this zone in order for us to have a sell entry. So I believe this sounds interesting, simple and comprehensive for you. Please do not forget to like, to share, to subscribe, turn on your notification bell. You can as well join our mentorship course where we share with you trading ideas that you can master the financial market at a very simple and affordable price. So I'm going to leave a description in this video, a link that you can reach out and make inquiry, or you can join our signal group. As you can see, we share the signal regarding this particular trade. So let me show you the signal before we continue. So of course you can see the signal. That is the signal for that trade that was shared, and you can see the aftermath of it, how it is playing out gradually. So it is simple and very much straightforward.